You were listening to chartingwealth.com for Monday, the 11th of July, 2016. We always jump right into the market with IYY on our 2-day chart. What do we see? A huge up candle for the 8th of July, which of course was Friday. It is a big green up candle with a tall wick on top for the day. The market was up 1.55%. Now, IYY is the iShares Dow Jones U.S. Total Market Index Fund, and it's an exchange-traded fund that tracks the entire market. The market, after the Brexit drop, and that ended on that, all that down movement was on Friday, and then the following Monday, the 27th of June. And after that, the market shot back up again. I guess the Brexit wasn't that bad a thing for the market. Maybe a lot of people were making a lot of money shorting the market for those 2 days, and the market has consistently since then moved up. We have seen one green candle after another. We did have a red open box 2-day candle on the 5th of July. But again, that just means some indecision. The market continued to move up. We did, with this candle, have a crossover going up on Friday. Still, the derivative oscillator is in the negative. This candle has not finished forming yet. It will finish on Monday the 11th. Again, it is a 2-day candle. The derivative oscillator is still in the negative. However, the MACD crossed over the red signal line during the course of the day on Friday, the 8th of July, and we do have a big green up candle. Confirmed crossover. Derivative oscillator, not yet. Now, if we look at the 4-hour chart, what do we see happening? Well, the 4-hour chart crossed over going up back on the 30th of June, and then it went up for a couple of days, slid down from the 5th through the morning of the 6th, and then started its climb back up again. It really slid sideways all the way from about the 5th of, actually the 1st of July, all the way through sometime, I would say, around the end of the day on Thursday, the 7th. Then the market started moving up substantially in the morning of the 8th and then on the afternoon of the 8th. We talked about what is the market going to do? It was just hanging there. And then, of course, on Friday, it really bumped up pretty strong. That is where we are. So we've got a confirmed crossover going up. We don't have any entry points right now to this new crossover because it bumped up in the morning and the afternoon. As we get into our new week, let's see how strong that bump up continues. We'll just wait and see to see what occurs. If we have a rollback on the short chart and then movement back in the same direction as the large chart, then we might be able to find ourselves a good entry point. We do not have one at this time. What's moving the market up? Well, listen to our weekly review and forecast. We'll be cutting that as soon as we get finished with this broadcast. Make sure to listen to it before you jump into the market on Monday morning. Now, what do we have going on SPY? It's the Standard & Poor's 500 Trust Series put out by Spiders. It is, again, an exchange-traded fund, a market index fund that tracks all of the stocks in the S&P 500 index, those 500 big companies with lots of volume in the market. Again, looks somewhat similar to the total market, crossed over on the 8th going up. Derivative oscillators a little smaller, but it's still in the negative. Not yet crossed in the same direction as the MACD. We do have candles again starting to move up around the 29th. That's Wednesday, the 29th of June, that 2-day candle ending, and has continued to pretty much move up since then. For the record, the S&P 500 up just a little less than the total market. It's up 1.49% for the day. If we look at what happened on the 4-hour or half-day chart, we see that the market ended on Thursday with a lot of indecision at the end of the day, and it opted to pop up both in the morning and the afternoon. No entry points on this new up movement yet. We'll wait to see if there's a rollback and an entry point. Again, sometimes there is, sometimes there isn't. The beautiful thing about not being a Wall Street trader is we don't have to trade. We wait till we find good trades, then we make those, whether the market's moving up or down. If you haven't already listened to our inverse funds, how to make money when markets crash, you need to go to Charting Wealth and listen to that under training. You will get a lot out of it. Now let's look at the Qs on the 2-day chart. What do we have going on the Qs? The Qs is, of course, the NASDAQ 100. It also turned around on the 29th. That was Tuesday after the big, well, that's actually a 2-day candle. That's actually Wednesday, but it represents the movement on Tuesday and Wednesday after the Brexit pulled the market down substantially on Friday, and then Monday the 27th it started its climb, and actually the NASDAQ 100's not looked back. It has gone up. No red open box candles since that candle on the 29th. The 1st, the 7th, the 8th, the 1st, the 5th, the 7th, and then the 8th have all been open box green upward moving candles with very little, if any, bottom wick. I don't see a bottom wick anywhere. So lots of strong up movement on the NASDAQ 100 represented by the Qs. We do have a crossover, actually, yes, going into the 8th, right at the end of the candle on the 7th, and it crossed over on the derivative oscillator moving up also. So strong up movement on the Qs. If we look at the 4-hour chart, what do we see? Well, saw a little bit of speculation yesterday, a little bit of indecision at the end of the day on Thursday. I'm doing this broadcast on Friday. I don't want to confuse you for Monday. But we saw a little bit of indecision at the end of the day on Thursday, then lots of up movement Friday morning, followed by more up movement Friday afternoon. Again, the 4-hour chart crossed over, going up all the way back on the morning of the 29th of June. Did have a sideways slide for a few days, couple of days, around the 5th through the 6th. Then in the afternoon of the 6th, the market started moving up again. So confirmed up moves on the short and large charts on the Qs. How high will the market go? We'll be talking about what we're seeing on the weekly chart on that weekly review and forecast. That will be a separate podcast we'll be doing next. Now, let's go to the 2-day chart and look at gold. What do you think gold did with all that strong up movement in the markets? Doesn't gold usually go in the opposite direction? Well, guess what? Gold didn't. It went up 0.60%. Gold went up for the day. Now we have a red open box candle. That candle again is our Heiken Ashi type candlestick, which shows you average pace. It's showing indecision even with this up move. Derivative oscillator continue to get larger, and the MACD move further away from the signal line, so that up move in gold remains strong. If we look at our 4-hour chart, what do we see? Well, we see we have a 2-day trend line drawn. It does look like gold has been sliding sideways since about the afternoon of the 6th, and it hasn't reached the peak it hit from the morning of the 6th in all this time. So gold tried to cross over in the morning on the 8th. It just did not have enough downward momentum to do it, although derivative oscillator continued to lose speed throughout the day. So we may see gold making a correction here soon, at least on the short chart. It's still confirmed up moves on the short and the long chart. When gold continues to go up, as does the market, very interesting that we don't have that inverse relationship with gold as a safe haven. People seem to be buying gold and the market. Is that not curious? Pay attention to those things and see what you see. So pay close attention at the beginning of the week. Is the market going to hold on to these gains? If it rolls back over on that short chart, that is, it corrects and backs up, as we call it, and then moves back in the same direction, you might have a jumping in point on something like the S&P 500 as represented by the SPY, an exchange-traded index fund, or QQQ, the NASDAQ 100. Continue to watch and pay attention to gold, see how long this relationship occurs with it moving in the same direction as these market indexes. We appreciate you listening to us every day. As we've said a couple of times already, the weekly review and forecast will be coming out soon. Please pay attention to that. It's the only time in the week that we listen to and watch the weekly chart. Also, I've got a great piece of news I'm going to be loading up over the weekend. The market worksheets that we had told you about. that allow you to actually, as you listen to the podcast, fill out the market worksheet, have something right there before you that you can follow. It tracks the MACD, the derivative oscillator, gives you a space to put in comments, to talk about the candlesticks, any actions you're taking, and we have all of the indexes that we cover. IYY, the total market, S&P 500, SPY, QQQ, the NASDAQ 100, and GLD Gold. We're excited about that. We're going to be posting that up at the website, give you some links for that later. It'll just be one more thing to help you visualize and see what it is we try to do every day here at Charting Wealth. That is charting the stock market, becoming masters at reading charts. Because if you can read the charts, it's just like a map. You can drive your way to the riches you seek. That's what we want to have you do. Now, again, we're not a stock calling service. We are an education firm. We want you to educate yourself, learn how to read these charts, feel comfortable with the market. And again, we don't press the market to do what we want it to do. We read what the market's doing, and we let it tell us what to do. That's chartingwealth.com. You appreciate what we're doing, give us a 5-star rating on iTunes. Also, subscribe to us there and subscribe to us at YouTube. When we get 1,000 subscribers, we have many thousand listen to us every week, but when we get 1,000 subscribers, we'll then be able to do some proprietary broadcasts for you. So subscribe there. And we just appreciate hearing from you. Facebook, Instagram, YouTube, you name it, we are there. Twitter also, left that one out. But let us hear from you. chartingwealth.com.